Welcome back, and joining us on the show now is Harshal Barot from Metal Focus. Harshal, hi. There's so much that's happening in the international markets. Until now, we were looking at tariffs and, of course, the US inflation numbers. But the geopolitics clearly has added much more in sense of prices and impact as well. With where the gold prices are trading right now, just $50 to $60 away from its all-time high in the international markets, while, of course, the Indian markets have hit an all-time high of lakh rupees at 10 grams. What's your sense, first of all, in the kind of scenario, the background that we're working with?
Good afternoon, Manisha. I think geopolitical uncertainty has sort of become a permanent feature of the precious metals market since the Russia-Ukraine war broke out in 2022. And at times when that seemed to be easing, we had economic uncertainties like the trade war coming into the market. So I think the overall backdrop, as far as gold is concerned, still remains very, very positive. Apart from the just renewed geopolitical uncertainties, as you mentioned, U.S. inflation has been now supportive of the argument for rate cuts by the Fed. So all in all, I think we are set to see new highs in gold, and we continue to have a very constructive outlook as far as gold is concerned. We see gold making new highs in the coming months.
3,500 is what gold is eyeing right now. But beyond that, what is the kind of levels that you at Metal Focus are now looking at for this year or even next for that matter?
I think, $3,600 to $4,000 levels is the broad range that we are looking at, once gold decisively breaks above 3,500. So I think 6 months to 1 year down the line, we don't see anything materially changing as far as gold is concerned. We still expect official sector buying, by central banks to continue to remain very, very supportive for prices. The overall move away from the dollar, the de-dollarization theme, I think will continue to play a role in gold, even when the other uncertainties are not playing out. And I think that aside, even the US macro backdrop, with tariffs set to take effect in the coming months, I think we'll see a slowdown impacting the US economy, which will, augment the case for rate cuts as well. So all in all, I'm looking for a pretty good ride for gold over the next 6 to 12 months.
Oh, well, absolutely. For the Indian markets, though, we've seen a rupee depreciation as well come in today, and that perhaps seems to be supporting prices because the rupee is trading at around 8-week lows as well. Harshal, when it comes to the Indian markets buying, then you mentioned central bank buying has been on the stronger side. ETFs have done well as well. But what about the physical market in India? And that really seems to be suffering, would you say?
It's definitely. I think, not just in India, world over, I think because there's demand for safe haven assets, investment demand is generally, doing okay despite the high prices. But jewelry demand definitely is suffering, not just in India, but in a lot of markets that we cover. In India specifically, as you mentioned, prices now, above the 1 lakh per 10 gram level. I think we are also in a seasonally sort of slow period as far as Indian demand is concerned. So we expect jewelry consumption to stay under pressure, in the coming months as well. And only if the price stabilizes around the festive season, we may see, sort of a material rebound in demand. Otherwise, I think it could be a pretty bad year for jewelry demand.
Any percentage point that you're putting out in sense of jewelry demand decline?
I would say double digits.
Okay. Harshal, you said central bank buying is going to be one part of ETF buying is something that we've seen. But when it comes to, CFTC data, that still hasn't been very supportive. So where do you see the next major bull run coming in, and who would the participants be?
I think, as you mentioned, CFTC data still shows that tactical longs in gold are still to be built. I think that's more to do with the fact that, gold reversed from a psychologically important level of $3,500. At that time, the rally was looking sort of overbought as well. So we saw tactical positioning in gold not grow as much. So this, in fact, offers the potential for the price to rally much further once these tactical positions also come into the market. And as far as ETFs are concerned, last couple of years have been generally bad as far as Western markets are concerned. This year, we've seen Western investor inflows coming back into ETFs. So I think that's another argument that is supporting gold at the moment. So overall, as I said, investment demand part of gold and central bank buying, these two remain very, very supportive for the price. It's only jewelry consumption that remains a headwind.
Absolutely. So while you have told us that the international gold prices could see $3,600 and $4,000 an ounce on the higher side, what would you see that converting into for Indian markets? Lakh done. Are you looking at levels much beyond lakh rupees in the India?
Yes, I think just extrapolating the dollar price, we could still see another 5,000 to 7,000 rupees run up per 10-gram levels in gold in Indian terms.
Okay. So from lakh to lakh 5,000, lakh 7,000 is what you could see in gold prices now.
My God. All right, Manisha, thanks very much for taking us through that conversation. So absolutely escalating in terms of prices for gold, which is currently at a 1-month high. We need to take a short break, but as we do that, here's a quick update. Unlock a new dimension of business intelligence with CNBC-TV18 Access. Our premium members-only experience on CNBC-TV18.com, from market-moving insights and thought leadership to exclusive access to marquee events, journalist interactions, studio tours, and high-impact learning sessions. This is truly an elevated experience, with members also enjoying curated lifestyle privileges and perks, the power of insight, the privilege of access, exclusivity, experiences, and influence. Yours to claim. Become a member. Log on to CNBC-TV18.com/access/plan.